Business news now. Charles Pellegrin is here. Up first, he's talking about Nippon Steel finally sealing the deal on its purchase of US steel.
A lot of eels there in that. I didn't realize that opening sentence.
So many.
Anyway, say that very quickly. The two companies said on Wednesday they'd finally completed a long-running process in which the Japanese steelmaker acquired the US firm for $14.9 billion US. It's not been a smooth path, and a lot of political opposition had to be overcome, with the U.S. government given a measure of control over the company's actions moving forward. Luke Schrago explains.
It's taken a year and a half, but Japan's Nippon Steel has bought US Steel in a $14.9 billion deal that'll be keenly watched by both US politicians and unions. The Japanese steelmaker had to overcome entrenched opposition after reaching an initial agreement in December 2023. United Steelworkers was against, and the Biden-era White House blocked the deal in early January this year over concerns one of the nation's largest steelmakers would end up under foreign control. However, Nippon Steel saw an opportunity in Donald Trump's coming to power and worked to sweeten the deal for the notoriously mistrustful US president, providing the government a golden share, something Trump crowed about last week.
And we have a golden stock, we have a golden share, which I control or president controls. Now, I'm a little concerned whoever the president might be, but that gives you total control.
It hands US authorities veto power over a huge number of corporate decisions, such as shuttering plants, cutting capacity or offshoring jobs, as well as any future US acquisitions, and even naming an independent director to the board. Nippon Steel also promised to maintain US Steel's Pittsburgh headquarters and the firm's name, and is now likely hoping to take advantage of its new presence there, circumventing the 50% steel tariffs foreign competitors still face. US Steel, for its part, will see $11 billion in investment through to 2028, including an initial billion-dollar tranche for a new US mill.
Well, Nippon Steel's CEO held a press conference in Tokyo this Thursday. He confirmed that he'd agreed to give the unusual powers to the U.S. government in the form of that golden share, which gives it veto power on a number of strategic issues. He said he saw no issue with those requirements, notably because the company intended to expand investments beyond its current plans. But for Gordon Johnson, analyst and CEO at GLJ Research, the golden share has no real weight whatsoever.
So this idea that the U.S. government still has control, I think it's bogus. I think it's, the Trump administration trying to save face, because not too long ago, they said they were denying this on national security concerns. And now all of a sudden they're allowing it to go through. But again, we always thought they would, because they want to appease stockholders.
Straight to the markets now, Charles. What's happening?
So equities in Europe falling at the open this Thursday, weighed down by the ongoing conflict between Israel and Iran and the likelihood of U.S. involvement, and following the U.S. Federal Reserve's decision to keep their interest rates steady as they await more information on the potential impact of Donald Trump's tariff policy on inflation. The Bank of England also expected to hold its interest rates steady this Thursday. Investors will be paying close attention to anything that comes out of that presser later today. The FTSE in London opening 1/3% lower.
Now to some concerning data for the French economy.
The National Statistics Office, INSEE, here released its forecast for growth in 2025, and it paints a stark picture of the country's economic situation, especially compared to its European neighbours. The economy will grow by 0.6% this year, which will be less than the Euro average of 1.3%. The French figures in red, the Euro area figures in blue. So this is a reversal from the trend we saw in the last 2 years, where France appeared to show resilience compared to the rest of the bloc, with 1.6% growth in 2023 and 1.1% growth in 2024, outpacing the Euro area. In its outlook, INSEE said the French economy doesn't seem to be in tune with the rest of the continent. Its growth engines are now running out of steam. This slowing down comes at a crucial time where the government is expected to stabilize public finances and a runaway deficit, but has to contend with a fractured parliament. French households, meanwhile, are keeping their money safe, with savings rates at their highest levels for 45 years, excluding the pandemic.
Now, finally, we're going to end with what we could be one of the biggest sales in sports history. This is, isn't it?
This could be a Hollywood blockbuster of a deal, and it concerns the Los Angeles Lakers. The NBA franchise, with such stars as LeBron James and Luka Doncic, is reportedly being sold by its owners, the Buss family, who've had the team since 1979. And this could be the most expensive sale in U.S. Sports team history, with TWG Global CEO Mark Walter, who already has a stake in the franchise, taking the majority stake. The Los Angeles Lakers valuation is estimated to be at least $10 billion, so a sale would surpass the previous record by quite a margin. In March, the Boston Celtics were sold for $6.1 billion. As a point of comparison with the world of football or soccer, PSG, this year's Champions League winner, is valued at just under $5 billion.
Yeah, big difference. Sean, thanks very much.